This is the Friday, September 15th, 2017 version of the Market Plus segment. Joining us now is an all-star panel of analysts, Naomi Blohm, Angie Setzer, Darin Newsom, and Ted Seifried. Folks, welcome back.
Thanks for having us, Mike.
Boy, we talked quite a bit in that first show, but now we get the chance to expand a little bit more, and we get to pick up the topics that we dropped, such as cotton, which really had a big week, down $5.52, 100 on the nearby. Naomi, you are nodding and your eyes are big. What are your thoughts on this cotton market?
Well, when hurricanes take different paths, things change. So, of course, that rally up was right up to old resistance levels on charts. And then we didn't have any triumphant news to take it higher, so back down we go to where we were before. So it doesn't really surprise me too much. The USDA gave us humongous bale numbers on that report. They gave us double the ending stocks from a year ago. So the market is believing that we have supply, and the Chinese production is up and the production in Brazil is higher. So now that we've had our triumphant rally and catastrophic fall, I think we are going to now just sit and do nothing for a while.
All right. And now, Naomi, you said something interesting, and this might be a full table discussion. USDA released its report. Yeah. The market believes that we have these numbers. Darin Newsom, does the market believe? Yeah, well, I mean, because you're looking at the spreads. Does the relationship that cotton has gone through, watching that post-report fall apart as it did, does that lend credence to the fact that the market does believe these numbers?
Absolutely not.
Okay.
Still an inverted market, still bullish. We got to buy the rumor, sell the facts sort of thing. And, for all of the USDA apologist fans out there, let's not forget that immediately following the release or attached to the release of this report, they put an addendum saying all of these numbers are wrong, so we're going to resurvey and do them again in October. So, did the market believe the October cotton number? No. Because
it traded that number.
It did on a buy the rumor, sell the fact. They pushed it up so far, the inverse had taken it so far, it ran out of gas, created this vacuum, there was no one left to buy. Fell back down. Yeah. I don't think the market's changed its structure one bit.
Okay, so you still see a bullish setup in the cotton market.
Yeah, absolutely. And this crazy number that they've got for ending stocks, which will be changed in October once they resurvey, that's not going to stand.
Yeah, I think the most interesting thing in cotton right now is for one, we don't know what supply we have. We don't know what kind of production we're looking at. We don't know what kind of damage we have. What we do know is export sales are 60% of current USDA estimates, about 6 weeks into the marketing year here. And last year, that was a continuation of, it was every week we saw these huge cotton exports. And so it goes back again to the cash market, and we'll see what that kind of develops into. But I think when it comes down to it in the market structure, no matter what, with those USDA reports, you have, and I don't have a good way, for lack of a better term, I would say your non-educated buyers and sellers. And I don't mean non-educated in the traditional sense. I mean, they use headlines to dictate what their trade is. They're not in the trenches, taking a look at what actually is out there, what kind of export sales we have, things like that. They hear bearish USDA numbers, lack of confirmation of expectations, and they sell on that side. Same with wheat, corn, beans, whatever it may be.
Well, yeah, in that respect, USDA reports they serve one purpose and one purpose only, and that is to create trade for the CME. And you can look at any market, as you just said, cotton, wheat, corn, soybeans, whatever you want to look at, and there is no volume until a report day, and then you get a spike. Yeah. And then it goes right. I mean, there was nothing today in the corn market. I mean, some were wondering if we were going to have negative trade volume today in the corn market. Yeah. So, I mean, that is USDA's only purpose with reports right now, is to create trade for the CME. The only problem is it happens over the course of maybe an hour, 2 hours, and that's it, and it goes quiet again. So that's what I think was going on.
The stock market is still really high, and so everyone is all in a tither with that, and so there is no excitement in commodities. And so you're going to finally see, I think that the stock market's going to fall apart in 2018. I look at the luxury items and the luxury stock markets, and I think about my own little town and the luxury boats and engines and things that are there, and that is not looking fantastic. And it reminds me so much of 2007. So I think you're going to see the stock market set back lower, not like crash and burn, so don't get all paranoid, but you're going to see money finally coming back into commodities in 2018 because these stories are finally developing. Crude oil is finally starting to have a story. Our grain markets are having a story. So once our money comes back in, ta-da, you'll have some excitement.
Now, and a little bit of anecdotal evidence on the other side, one of the key measures of economic well-being is RV sales. And I live right on I-80, and I see more fifth wheels and camper trailers rolling from Indiana to the west than I can shake a stick at. I mean, it is unbelievable the way those sales appear to be moving from my vantage point in rural Iowa.
Carl and I are getting into the Griswold cousin, Uncle Eddie RV style. We can't wait. We're looking forward to it. Yeah, the bunnies
travels.
All right, so our bunny breeding market elevator person is, I guess, saying the top is in.
Yeah.
She is buying an RV.
Show on the road.
Yeah, Ted, I mean, what are your thoughts? When you look at the broad economy, and let's look everything as Naomi brought up, stock market, I mean, just has been on fire for the better part of 9 years. Are we due for a 10, 20% correction? And is that going to spark commodities?
Listen, we've talked about that for the last couple of years. Brexit and Trump.
Right.
There's been so many things that could have triggered a big sell-off in stocks. I don't know. I've stopped trying to pick a top in the stock market because I've been bearish for 3 years.
Well, hey, I've been bearish. I had a guy ask me this week. He said, "What do you think the top is in on the Dow?" And I said, "Honey, you don't want to ask me. I've been bearish since 15,000."
Yeah, right.
So I mean, honestly, I thought we were inflating with fake money a long time ago.
Absolutely.
And we obviously have not been.
We're still here.
Yeah.
To go into commodities,
yes,
to bring monies back into commodities, you're going to have to find some sort of supply and demand issue. And I'm not talking about USDA nonsense. I'm talking about a real supply and demand issue.
Sure.
And right now, if you think about it, cotton comes to mind. Maybe soybeans come to mind. Minneapolis wheat. Did it run its course? Does it have another, it's wheat. Does it have another life left in it? I don't know.
We're grasping at fringes, I think is what your point is.
Exactly. It's going to have to, you're going to have to find a market or a market sector that has a real supply and demand issue. And right now, they're few and far between. Right. And you consider, it looks to me like the dollar's about run its course as far as going down. I've been a bear in that for I don't know how long, and it hasn't really done as much as I'd hoped. And if that starts to turn around, that could be what puts a top in the Dow, but that's not also a great recipe for bringing money back into commodities.
It's a recipe for cash on the sidelines, is what it sounds like.
Exactly.
Now, I do want to get to some of our questions from some of our great viewers. We encourage all of you, send in questions as you have them, and we will get experts to, well, we're going to chat about them anyway. So our first question is from Josh in Minnesota. Josh is on Twitter at KramerJosh. He wants to know, and Angie, this one's coming to you first. If you have basis contracts for harvest delivery for corn, what would be some realistic targets for these futures to get it priced?
We've been looking for 370 to 375. I've got some old crop basis targets that we were able to lock in, or basis contracts that we were able to lock in first half of September, and that's been our goal. I don't have much harvest basis locked in at this point unless it's against a hedge, but 370, 375 has been my top end, and I mean, you may see above that, but with a basis contract and the big carry that's in the market, I wouldn't necessarily roll too much. I mean, and the other thing that you can look at, we talked about cheap calls during the show on soybeans. You can look at a March, basically in the money 370 or 380 for about a dime. So it'll be less than what your cost of a roll is. And then when you roll a basis contract, you definitely risk, especially into a carry market, you take that 15 cents and then you watch the next month come down to the front, and that's more painful than anything.
Yeah.
So.
And I agree with you, Angie, with the 375 target. And the other thing I'm thinking is that harvest is going to be a long, drug-out process this year. And so we all, I think, have agreement that it's going to be variable yields and it's going to be hit or miss depending on which part of the state people live in. But where we are at in Wisconsin, we need 4 more weeks yet before we can even start. I mean, they haven't even started silage where I'm from. And so with the long harvest, it's going to just take a lot of time to finally know what's out there for sure, and probably till January USDA.
February.
March.
All right. So 370 to 375. Ted, do you have a difference?
I think maybe I'm gonna add 10 cents onto that.
All right.
All right. I mean, it's not that big of a deal. No, but I think you got to watch soybeans, because if soybeans really make a push, You can talk 385, 395 December.
Quickly.
Well,
You could.
it depends on when this happens.
Right.
Yeah.
Can we get there in time for the December contract question? But yeah, if soybeans really get going, that's the only thing that does that. Otherwise, yeah, 375 to 385, I think is a very realistic target for.
All right, Darin, do you have any different thoughts in mind?
Nope,
370, 375. All right. Next question. Former farm boy in Central Iowa on Twitter at Rural Mid Iowa wants to know: huge U.S. corn supply. We need to get exports to reduce that. Is that even possible in today's world? We seem to get headlines every other day. NAFTA is currently being renegotiated. We're going to pull out of the Korea-U.S. free trade agreement. We're going, North Korea is shooting missiles. Can we increase exports in today's environment? Nobody speak all at once. Darin.
Well, I mean, we've already been told we're not going to.
Yeah, we're
Yeah.
All right,
Reduced
so
it
Darin is
already.
coming back to the USDA report.
I mean, come on, those are absolute, aren't they?
I mean, it's been a slower start compared to a year ago, but of course, a year ago we were
Brazil's
short
back in the
Brazil.
game.
Yeah.
I mean, Brazil's back in the game, and they're going to take some of their business back, and they might take some of our business to go along with it. There's all this chatter of the possibility of new business coming online. We're going to have to develop something. We've got to find a way to maintain the level of exports we have right now, if not increase them. And the question asked about the current environment is not necessarily conducive to thinking.
Well, the
that
low dollar is.
The low dollar is the low
But the
word.
political environment is
The political
question.
environment, right? But
But you
even
see
the
all the
dollar's not
posturing.
quite as low as it needs to be. In corn, it's not as big a deal, but you start talking about wheat and soybeans. The dollar, a lower dollar than where we are right now wouldn't hurt anything. But we've got to find ways to keep the trade partners we have right now with corn.
Now, one of the stories that was pretty big earlier this week, and we've talked about it a lot. Angie's mentioned, I know Darin's mentioned, Ted and Naomi, we've all talked about China, huge corn supplies they're sitting on. We don't know quite how much and quite what condition it is in.
Or where it even is.
Right. But we do believe they have piles of corn. They announced, Naomi, earlier this week, that they are going to introduce a new policy of basically a national ethanol blend rate. Is that something that by 2020 they're going to get this kicked off, so it's probably not going to happen this year? Does that get you fired up for the possibility of future exports, or can China meet all that demand domestically?
I don't think they're going to buy any additional amount from us because they have their friendly partner with Syngenta, so now they have the means to produce rapidly a lot more
Increase
corn.
their own yields is what you're
And
thinking.
so what they've done is said, well, we're not going to get caught with all of the behind-the-scenes talk that we had before, pants down by the ankles. They're not going to go through that anymore. So they're saying, we're going to grow our own corn, and now we have the means to, if there's ever any excess, we can use it for ethanol. And so, yes, of course, they want to clean their air, but ethanol isn't the solution for cleaning their air. So the amount of corn that they're going to try to do, so it's like by 2020 is this spiel. It amounts to, based on the research that I saw just in the past 2 days, 1.8 billion bushels of corn to be used for this ethanol incentive based on what they're using right now.
Okay.
So we grow and use 5 billion bushels of corn towards ethanol, and so the number is 1.8 billion bushels. So it's definitely an increase, but it's because they're going to grow better corn yields.
Okay, so they're anticipating our yields are going to increase. We got to do something here to make it
They've
work.
got a lot of old stocks that they need to move that's
Yes.
in not great condition. But they do use a lot of wheat for ethanol, so that's a little bit of a shift in the sort of the paradigm of how they're approaching ethanol. So, yeah, I don't know. In years to come, if they have short crops, maybe that does open the door for our exports. They deal fairly exclusively with the Black Sea area, Ukraine, but if their demand goes above and beyond that, maybe we are on the table. Either way, when you take more out of that world balance sheet, that should be a positive thing for corn.
Except for we have a new policy as well, that we aren't going to do business with anyone who does business with North Korea.
Oh, that's a huge
So,
point. Yep.
We have a new policy now as well.
And that
I
is
can't
not
imagine stopping doing
as
business
of
with China.
yet.
It just
It's been discussed.
It has been discussed. It's been floated, I believe, on Twitter.
If it shows up on Twitter, that makes it policy.
well.
Only
All right.
if the House retweets it and the Senate
Yeah, I
likes
saw
it.
that one
There you
today.
go.
All right, Twitter followers, you know what they're talking about. For those of you that aren't on Twitter, count your lucky stars.
Yes.
Thanks to everybody today for participating. Darin, Ted, Angie, Naomi, thank you all so much for your insight. We always appreciate when we get these minds together to share their thoughts. Join us again next week, ladies and gentlemen, as we look at how new pork processing facilities could impact Midwest producers. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.